afternoon. Welcome. You're watching Business Today TV. This is Market Today and I'm Sakshi Batra. We'll be talking about all markets, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing in trade. We'll get you expert views to find out where exactly should you be putting in your money, where can maximum profits be made in the current market setup, and what is the right strategy for you as equity investors right now. We'll be introducing our guest to you very shortly, but first up a quick check on the benchmark indices as we speak right now. Halfway through the mark of the trading session, the markets are holding up above that flat line right now, 0.1% higher on the Nifty, but still below that 19,700 mark. The Sensex also flattish in trade, but some green is definitely positive. 66,421 currently on the Sensex as well. Let's look at the broader markets, the mid and the small cap indices, and see if they are looking good and better than the benchmark indices. The small caps have now come off the day's high point, but staying on with some percentage of the high, above the flat line. 0.1% higher for the mid cap 100 index as well. The Nifty bank is slightly weak today on the back of weakness that is being seen on the PSU banks and the private banks space as well. The PSU banks are now down by 1% in today's trading action. So that's where the pressure is building up for the Nifty bank. FMCG stocks down in trade, 0.5% decline coming in on the IT pack as well. But the bright spots in the markets today, clearly, the auto pack, the metal pack, that is shining the brightest. 2.2% uptick on the metal space today. Autos up by 1% as well. Financial service 0.1% higher. The realty stocks 0.25% up in trade. Healthcare 0.5% gains coming in. Let's also look at the top gainers and the losers at this point in time. As far as the major drivers on the Nifty index is concerned, the Nifty 50 pack does have a whole host of names coming in from the metal pack like Tata Steel, JSW Steel up in trade. Power stocks are buzzing as well. You have NTPC, that's up by 2.7%. You again have Hindalco from the metal basket, that's up 2.5%. Cement basket is up, Ultratech, Grasim, these are the stocks that are moving up. From the auto basket, Tata Motors is also up in trade. But what is dragging? ITC again, the top loser, second day in a row after the demerger announcement. Asian Paints ahead of numbers, down by 2.2%. Axis Bank down by 1.5%. Britannia also slightly sluggish in trade. But let's welcome our guest on the show. Mr. HEMANG JANI joins in, well-known market expert. Welcome, Mr. JANI, and thank you so much for taking the time out for this discussion. Well, overall, I wanted to take your view first on the markets. How are you looking at the last 2 days of consolidation that we've been looking in the markets after that sharp run-up? And what would you advise as a strategy to investors in this current setup?
Thanks for the opportunities. Actually, I think markets have been stabilizing for the past few days after sharp run-up, and the earnings season is panning out pretty well. Also, global markets by and large are holding out. We're not seeing any major negative triggers as such. So, our feel is that you might see a bit of consolidation in the index. B, there might be a little bit of rotation because IT has been a disappointment. Also, wherever you see the numbers not up to the mark, some money could move out of that and move into the sectors or stocks where the numbers are very good or where the growth outlook is better. So banking, NBFCs, some of the consumer names, autos, these are the pockets where we think that the strength will continue. You might see subdued movement in the IT pack or stock specific wherever there are certain negative news.
Okay, understood that as well. Which are the sectors that you believe are overvalued and undervalued at this point in time? Where would you be bullish now?
So actually, this season, banks have been extremely, outliers in terms of performance, including NBFC. So that is where we think that a large part of the focus would be. Because while the credit growth is strong, NI picture by and large is okay, and the margin pressure is not so much. Second one is, of course, auto ancillary. That pack is clearly showing a lot of momentum, and we think that that would continue.
Hmm.
Apart from that, the domestic consumer companies, be it Colgate or Dabur or some of the smaller consumer companies, that is where we expect good momentum over the next, let's say, few weeks, as we have a better monsoon progress, and the management is sounding quite confident.
Okay, let me discuss some stocks with you then. Let's start with ITC itself. We've seen the stock has dropped about 7% in just 2 days after the hotel demerger news was announced. And that's after, the stock inching extremely close to that 500 mark as well. And after that, the sell off has happened. Is the demerger that bad that the markets are reacting this way? Or is this just profit booking or a sell-in news kind of a reaction?
Yes, the stock had run up quite a lot, and the demerger was something that was going around, and market was expecting that. But I think the structure that they have chosen to demerge, wherein the ITC will own 40% and the shareholders will, own 60%. Some investors are not happy with that structure, though the final details will be known only on 14th of August. But this development surely has kind of created a little bit of disappointment, stroke uncertainty about how exactly things are going to pan out. There could be some amount of negative reaction because of the possibility of a holding company discount once ITC uh, carves out the hotel unit from itself and lists separately. So it's a short-term pain that the stock is going through. I think when you look at on an overall basis, I don't foresee any major negatives in the core business. That's doing pretty well. Hotel business after a long time is showing good traction. So use this correction as an opportunity to buy because anyway the stock had run up and investors were waiting on the sidelines.
Okay, but in the long term, would you say that there is value creation and value unlocking that can happen for the ITC shareholders, those who are still holding the stock?
Surely, as we all know, ITC has 3 to 4 different verticals. The consumer business, the cigarette business, the paperboard, agri business. So the only concern is that the structure which the management has chosen, would they be opting for a similar structure for the other businesses also? We do not think so at this stage. And there is enough value across all these, verticals. So we are extremely positive on ITC from an investment perspective.
Okay, but would you see this as a precursor to the other verticals also to getting demerged going forward?
So that surely will be there on the mind of the investors, as at the end of the day, each business, depending upon what unlocking it can bring to the shareholders, people do focus upon that. But the timing of that and the structure that the management chooses will be different. Overall, we are quite positive on the sum of parts basis, and depending upon finally what final details are out, we'll have to basically look at it separately.
Okay. Brokerages have forecast ITC Hotels share price to somewhere range between 15 to 27 after demerging the hotel operations from the new firm. What is your own sense here? What could ITC Hotels be valued at?
So just to give you an idea, Sakshi, we think that the EPS for hotel business on a standalone basis could be somewhere around 18, 19 rupees. And if you compare some of the current listed entities, be it Indian hotels or couple of more entities, the smaller ones also, given the kind of buoyancy that we've seen and the turnaround that we've seen in the hotel, they could easily get about 25 P multiple. So I think that kind of value they can easily get, and I think it's pretty fair to expect that.
Okay. Lastly, just wanted to get a broader sense on the big conglomerates demerging their businesses. Before ITC, we also saw RIL demerging the Geo Financial business as well. What does this really mean for the end investor, the retail investor at large? How should one be really approaching these big conglomerate names, in the wake of such demergers? And is there any similarity between the two?
I think, Sakshi, there are many, precedents to this kind of a value unlocking across companies over the past many years, and some of them have successfully done it, and investors have actually participated and benefited out of it. And we think that Reliance, it was a very successful exercise, and the kind of net worth and the value creation for shareholders is for everyone to see how it has been done. So I think ITC and maybe few more companies will also have, their own kind of, way to deal with this unlocking opportunity. And I think for investors, by and large, it's going to be very good. The only thing is that the manner in which the management does that, the value that and the transparency that they bring to the table, those are the aspects that really play an important role in terms of what value investors get.
That's very true. So how would you be placed on RIL post the demerger now at 2500? How does the stock look to you for those investors who may be wanting to invest afresh in Reliance Industries now that they have missed that deadline of getting that buy one get one free offer for Jio? Is it still a stock that one should consider?
Yes, demerger is an event is out of the way. And if you see, Reliance stock had already gone up 25% since March, primarily because of this demerger possibility and the possible value that you may get. So
Yeah.
now that being out of the way, I think the focus will be more on the core business, the O2C, the retail part, the telecom. And of course, there is always going to be a possibility of further unlocking of other businesses over a period of time. So I think having seen a big correction in the last few days, surely it is entering into a very attractive zone for investors.
All right, understood that. Let's also focus on some of the broader, news that could impact the markets and the market participants at large. Last evening, we heard the SEBI chairperson make a slew of announcements, which will impact the way investors trade and they get the transactions done. Let's talk about all of these developments and help all our viewers really understand what do they actually mean for them as an investor and for the markets at large as well. So SEBI did announce that it will move to a T+1 settlement cycle for all scripts effective October 1st, 2023. This means that the trades will be settled one day after the date of the trade instead of the current 2-day settlement cycle, and this will be extended to mutual funds as well. Could you explain this further? Is this a path-breaking move? How will this really help the end investor?
Actually, T+1 is already implemented. Now, what SEBI is talking about is an instantaneous settlement. The moment you do the transaction, it will, get settled immediately. And with UPI framework being in place, the SEBI is trying to see if we can move towards a instant kind of a settlement, part. And we think that this can be very big in terms of reform because it can actually do away with the current margining system. Because currently, when you try to do some transaction on the exchange, you have to pay a certain upfront margin. And T+1 is surely a little better, but when you do instant transaction or settlement, that reduces the lag even by less than one more day. So I think for sure it will bring about more efficiency in the system. The money flow will be much faster, and I think the participation also will improve. So I think these are path-breaking reforms, and the speed at which SEBI is implementing or trying to implement is surely quite positive.
Okay. The other thing that SEBI chairperson announced was as far as the delisting process is concerned, to simplify that process, the regulator noted that the process of exiting the stock markets has to be made simpler going forward from here. They've now thought about allowing companies to delist via fixed price as well. If you could break that down for all those companies that are listed on the exchanges, how will this really impact them?
Sakshi, currently, there was this reverse book building process for the companies which were looking to delist their stock. And this process was slightly complex, and, maybe few large investors could actually influence that. And I do remember that in few cases like Linde, for instance, the stock price was about 800 or thereabouts, and some large investors had put in a bid of more than 2000 rupees, and the promoter then backed out and the whole delisting did not go through. And because there are a large number of investors, sometimes the price at which they quote varies, and there are instances where the delisting does not go through successfully. So I think the SEBI is trying to make it more simpler, and if there is a fixed price mechanism, maybe that would be little easier for everybody to look at, and maybe the success ratio could be better. So
Okay.
we think that surely it's a positive step by SEBI for the companies who are trying to delist their stocks.
Okay. One more thing that we noted, which will impact the larger viewers as well, is that SEBI chief has talked about that there is a consultation on fin influencers that is on its way soon. The SEBI chief explained that the regulator cannot regulate fin influencers, as what they recommend in their private capacity cannot be curbed under the Indian laws. However, she did add that the regulated entities like stockbrokers, mutual funds and so on will be barred from dealing with fin influencers. How do you read this piece of news, and what does it really imply?
So actually, as we all know, social media has become so prominent, and particularly with younger, investors, they do get, access to to social media. They do get influenced by what people are saying. And recently, also, when YouTube put out an ads claiming that certain people are real experts, the others are probably, quote unquote, not experts, has also created some sort of a controversy. So I think people are resorting to various means by which they have some sort of an understanding with influencers or surrogate, marketing and so on and so forth. So I think these things are evolving in India, but surely because of the kind of participation which is there by the smaller investors, the younger investors, it would be important to put in place some framework whereby these influencers are not entering into any sort of understanding with the companies, and where the final investors are getting affected by not getting the right sort of a fair advice. So I do think that SEBI really needs to look at what is happening at the ground level and come up with some framework to ensure that investors are not being taken for a ride.
Absolutely. Anything else that you also spotted from that conference and you thought that it is important for investors to note?
So we think that gradually SEBI is trying to actually come out with very detailed framework for algo trading, for the investment advisors, for the PMS AIF entities also, and of course mutual funds. So I think SEBI is very aware about what's really going on in the market and what sort of things need to be put in place. But I think influencers is something that at the moment they do not have a right way to kind of regulate in a proper way. So hopefully, at some point they will be able to come up with a very detailed guidelines on it.
Okay, understood that. Well, on that note, thank you so much, Mr. Jani, for being with us on the show, helping and explaining all our viewers what the latest announcements by SEBI mean for the market participants at large, and also helping us with your view on the markets overall as well. Always a pleasure speaking to you on Business Today TV. And with that, let's quickly look at how the markets are doing at this point in time. About 4 odd points higher in trade, absolutely flat in the markets, but holding up above that flat line, 19,682 currently on the Nifty, the Sensex at 66,402. It's the broader markets that's showing better traction in today's trading space, and we're looking at several pockets, including metals and autos, definitely taking the lead in today's action as well. Let's keep an eye out on the markets, and we'll continue to help you understand where exactly are opportunities emerging for you as equity investors. So do stay tuned with us onto Business Today TV. Don't forget to subscribe to this channel, and also continue to engage with us on our other social media platforms as well. That's Facebook, Twitter, LinkedIn and Instagram. Until then, many thanks for tuning in.